Morning, guys. It's Monday, May 5th. Grain markets are mixed this morning at 5:25 a.m. Central Time, mixed to lower. July corn futures down 3 at 466. July soybeans down 8 at 1050. July Chicago wheat down 2 1/4 at 540 3/4. July Kansas City wheat is down 4 at 537 1/4. July spring wheat up 2 3/4 at 613 3/4. Let's start off with U.S. weather.
Weekend rainfall was confined mainly to the eastern Corn Belt and U.S. Mid-South. Pockets of Kentucky and Ohio saw up to 2.7 inches of rain over the last 72 hours, although most areas saw drastically less. Portions of Illinois and Indiana saw totals up to 1.6 inches, although most areas saw less. The western Corn Belt, including Iowa, Minnesota, Nebraska, North Dakota, and South Dakota, were mostly dry. The forecast appears to be favorable with regard to planting. Only minimal rainfall is expected over the next week. Most of this week's rain will be confined to the south and Gulf Coast. Some rain may hit the far eastern Corn Belt.
Yeah, the heavy rain over the weekend was mainly an eastern Corn Belt thing, like Ohio. There was a band through Kentucky that caught some heavy stuff. We caught some heavy stuff here in Middle Tennessee. I went to the Metallica concert on Saturday night. It was at Nissan Stadium where the Titans play, and
Yeah.
we had like a big rain delay that lasted half an hour, just pissed down rain, and then they went on like right away. It was pretty quick, the turnaround. In any case, the forecast is pretty wide open for 5 days, and even the 5 to 10 day looks pretty good. This forecast shifted drier after Friday, and I think that's part of the reason that the markets are down this morning. We've just got a forecast that looks very conducive to corn and soybean planting moving forward. Here is an excellent map from our friends at Crop Profit. Over the next 14 days, based on Euro model data, U.S. corn areas will see only 55% of their normal rainfall. So you've got a weather situation here for the next 2 weeks that appears to be just wide open. And would the markets fall on that? Yeah, I think a little bit. When you get into a situation where planting in all likelihood is going to be completed without any issue on a national basis, and I know there's some local issues, of course, as there always are, but on a national scale, I think we're going to stay ahead of average. The next 2 weeks are going to be very conducive to corn and soybean planting, and it takes an element of risk off the table. Now, the bigger element of risk occurs in late June into July when the corn crop pollinates. That's the bigger make or break time frame when it comes to the crop. And that's why, with this sort of shift in the weather forecast, you see corn futures down 3 or 4 cents. It's not a big collapse, but the market does remove a little bit of weather premium from the market when you or from the prices when you get this sort of forecast. And that's what we've got here this morning.
StoneX raised its forecast for Brazil's soybean crop last week. The consulting firm estimates this season's crop at 168.4 million metric tons, up from its prior estimate of 167.5. The revision was attributed to better than expected yields in Mato Grosso. The firm also increased its outlook for Brazil's second corn crop to 104.3 million metric tons, notably higher than its previous estimate of 101.6. The increase was due to favorable crop development in key production areas.
One analyst at Ag Rural called the development of this year's second Brazilian corn crop nearly perfect. The second corn crop in Brazil pollinates sometime from mid-April through mid-May, so we're kind of smack dab in the middle of it right now, I believe. And over the last 30 days, according to our friends at Crop Profit, Brazil's second corn areas have seen 118% of their normal rainfall. So they're doing damn good. It's going to be a big crop. The StoneX estimate that was out on, I believe, Friday, it's 5% larger than USDA's current estimate. And I'm not sure if USDA will come up or not. These two estimates, especially a private group versus public, they don't need to align at any point. So Brazil is going to have not a record, but would be the second largest corn crop on record behind, I believe, the 22-23 marketing year. When it comes to corn production, I put the U.S. and Brazil side by side just to give you kind of an idea. The 2024 U.S. corn crop was likely 3 times larger than this year's Brazil crop. That's how much bigger than Brazil we are. So Brazil matters. They absolutely matter. They export a lot of corn. As a matter of fact, they export a much larger percentage of their corn than we do. Exports out of the United States account for like 17% of total demand. In Brazil, exports are 33% of total demand. We're still the biggest exporter here in the U.S., but the Brazilian crop absolutely matters with regard to exports. And right now, the U.S. is still the only game in town if you want a significant amount of corn and you're an importer. But Brazil will become competitive in all likelihood in July is when that's going to happen.
China has exempted roughly $40 billion worth of U.S. imports. The 131 products ranging from pharmaceuticals to industrial chemicals accounted for about 24% of Chinese imports from the U.S. last year. In a similar move, the Trump administration has exempted approximately $102 billion worth of Chinese imports. These products represented 22% of total Chinese imports last year. Beijing's exemptions are viewed as both a strategic response to Washington's actions and a measure to protect its economy from the ongoing trade war. Meanwhile, there are indications that U.S. China trade negotiations may be on the horizon, as just last week, China's Commerce Ministry announced that it is evaluating the possibility of trade talks.
Trump was talking over the weekend. He said that some trade deals could come as soon as this week. He also said that he's possibly willing to lower China tariffs at some point. When it comes to these exemptions, we mentioned this on Friday. So China's exempting some US stuff from tariffs. We're doing the same thing. The US has exempted a bunch of Chinese imports from tariffs, specifically machinery and manufacturing equipment items under the Chapter 84 and 85 of the harmonized tariff schedule, medical and COVID-19 related products, solar manufacturing equipment, and then more recently, all sorts of electronic stuff, smartphones, computers, laptops, semiconductor devices. You look at the stock market, you look at the S&P 500, and it's acted really well as of late, right? And what's the big market for what's the biggest things in the S&P 500? It's these tech companies. It's your Mag 7s, and they're not being impacted a whole lot by the tariffs because a lot of what they import is now exempt. So the US and China are doing similar things with the exemptions, which makes you wonder exactly where this trade war is headed. I mean, if we're going to do tariffs, but then there's exemptions on the stuff that really matters, who's it going to hurt? Maybe in the US, it hurts small business more so than the big companies, which is something that I don't really like personally.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
Our friend Corey Levinsky, he's at Biofuels Law on X. He's excellent. He was on Wednesday or Thursday last week, and we talked about ethanol to jet, SAF, and how the future is pretty cloudy given the policy that's out there. He's a super sharp dude. Was on and kind of told us the story. I know we haven't heard about this or talked a lot about this recently because the future is cloudy, but he explained why and things that we should look for moving forward. Ryan Moe was on Friday. He did a cash spread and basis update. If you guys are looking for a super sharp dude who's going to explain exactly what's going on in the cash corn market on a national and also kind of a localized scale, Ryan did an excellent job. We had a ton of positive feedback on this one. If you guys you're a farmer, maybe you're in the cash grain business, I don't know. I think this video would absolutely apply to you. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel it at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. Let me be very, very specific about what this is. What we do here on the podcast and on YouTube, this is a news show. What we do in the premium content, it is geared toward decision makers. So if you're the decision maker on your farm operation, this is for you. This is where we talk about cash grain marketing. This is where we talk about crop insurance. This is where we talk about policy. This is where we talk about budgeting. We don't talk about that stuff here in the free stuff. So if you're the decision maker, you got to check out the premium subscription. It takes like 30 seconds to sign up, guys. Give that deal a shot this morning.
President Trump's proposed budget calls for a reduction of more than $4.5 billion in funding for the USDA. The bulk of the cuts would impact the Conservation Reserve Program, rural development initiatives focused on water and housing, and agricultural research grants. The proposal would eliminate 3 programs that distribute U.S. commodities abroad as food aid. It also includes a reduction of more than $15 billion in funding for carbon capture and renewable energy initiatives. The proposed budget's one notable addition that could benefit farmers and ranchers is an allocation of roughly $100 million for food safety inspections at packing plants and rural rental assistance.
So this provides another degree of uncertainty when it comes to biofuels in particular. There had been a bunch of chatter last week and the week before that there was going to be some sort of RVO announcement. It never really came out. We had the video with Corey last week talking about the lack of clarity here. We could really use some clarity, absolutely. One of the big things with SAF is that maybe it doesn't necessarily increase the amount of ethanol that we produce, but it will offset what we may lose ultimately to electric vehicles and that sort of thing. So there's a lot going on if you want to look at it that way, or there's nothing going on, which is maybe even worse.
The funds substantially trimmed their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, April 29th, large money managers were net sellers of 46,000 corn contracts. The funds were also net buyers of 6,000 soybean contracts and net sellers of 30,000 contracts of SRW wheat on the week. The net short of 112,000 SRW wheat contracts is the largest since November 2023.
Premium subs, you guys have the full fund tracker charts in your email this morning. The net long in the row crop markets is modest. That's a modest net long in the corn market, modest net long in the soybean market, and large money managers just continue to lean on this wheat market, which has been under all sorts of pressure. I was made aware that U.S. wheat on this recent break has become pretty damn competitive on the export market. And supposedly there were some importers kind of searching around for some U.S. wheat last week, maybe. And maybe that's why we rallied on Friday. We'll see if we can get something going there.
Ukrainian drones struck a Russian grain terminal over the weekend. The terminal, which is the largest facility of its kind at the Black Sea port of Novorossiysk, had 3 storage facilities damaged during the strike. The terminal, which processed over 10 million tons of grain last year, has resumed normal operations. The attack comes on the heels of Vice President Vance's statement last week that President Trump had initiated the peace process between Russia and Ukraine. However, Vance emphasized that it is now up to both nations to advance the negotiations. Thus far, Russia has declined to accept a permanent ceasefire, while Ukraine has expressed support for an unconditional 30-day ceasefire.
If this were 3 years ago, wheat futures would be up like 50 cents this morning. And since it's 2025, wheat futures are lower this morning. So the market totally unfazed by that news. What did cattle do on Friday?
Cattle futures continued to head for the moon. Live cattle were $145 to $225 higher. Feeders saw gains ranging from $170 up to $280. Cash cattle trade surged to new record highs last week. In the Texas Panhandle, cattle were $6 higher compared to the prior week at $218. In Kansas, cattle sold at $218 also, which was $5 to $8 higher. Up here in Nebraska, cattle were $4 to $5 higher, selling at $222 to $223, excuse me. And then over in the Western Corn Belt, cattle also sold between $222 and $223, which was $5 higher.
Outside markets, the Dow's down 260, S&P's down 46, a little bit of pressure there. Treasuries are mixed. U.S. dollar is off. We've got crude oil down $1.09, and the June WTI was down a lot more than that. There was some OPEC news, 57.20 last trade there. Gold is up $68 this morning, very strong. Everybody have a great week. We'll be back on Tuesday.